They are our vehicle to the markets. I'm talking about charts. Everyone is familiar with looking at a chart when they are when discussing stocks, when discussing the futures, when discussing the price movement that traders are always looking to capture and profit from. So here we want to discuss just a little bit about some chart patterns that can help improve your trading strategy. It's all about the most basic or the simple ones that can be applied well here, guys. So just want to come right in and start a little bit about some easy charting patterns that we can all take advantage of. Why don't we start with you, Arun, here and see what is the best or maybe your go-to charting pattern?
I think as traders, there's so many ways to construct a chart, and you can go in so many different directions with what you see: pennants, flags, triangles. I'm sure everyone's done the research. Everyone who's watching has done the research on what the different chart patterns are. But as a new trader, I think what you have to understand is the volume behind the setup that you're looking at. And I think one of the simplest ones that you can actually start with is just a consolidation breakout, because what that allows you to do is figure out where the volume is, let the chart develop. And then when we get past a certain point or the upper band of that channel, then you know what, we've gotten past where the sellers are willing to sell. Let's go for the long. And I think that's one of the simpler ones. Now, one of the moves that I like to kind of go with here is, now it didn't happen on any of the trades that I took this morning, and I don't want to get into the other complicated things, but this is a setup that I'm seeing right now. On Airbnb, this was a trade that we took this morning. But the way it's setting up around this 158, it is clearly reacting to the sell side resistance at 158. It's been in play for 2 days or so. This has been an area, so we know that they're selling coming in at this price point. So what you are going to keep an eye on is what happens once we get past the highest point north of 158, which seems to be around 158.30 or something like that from yesterday's high. Once we get past it, it means we've gotten past the selling. This would be considered a consolidation breakout. And sideways we go, break through the top, and then you play for the extension. So once you've gotten past what's holding this stock back, you look for the expansion through the top. At that point, you can look back a few days, maybe set some targets. I'd look at 165 as the target or so, just because we've hesitated a little bit. But it's a matter of framing what you're seeing on the chart and referencing it to volume, because at the end of the day, volume is what moves these stocks. Buyers, sellers, they represent volume, whether they're buying a lot of shares, a little bit of shares, all that gets put together, and it dictates where the stock goes. So at the end of the day, what you want to do is when you see your chart, where's the volume at? That's what I'm looking at. And the simplest thing to start with as a new trader is to go, consolidation, that's where the volume is. There's the sellers, there's the buyers. If we get past either end, then you know the sellers have been beaten or the buyers have been beaten, and then you go for the trade in that direction. I think that's the one way to start off easy, not overcomplicate things, and just understanding how volume flows through a certain stock and how the market responds when it gets past a certain point where the volume was resisting or supporting.
So volume, obviously, very, very key. I'm just going to go with, a chart pattern that I just call it basically the morning consolidation break. And you can do that either way. It could break to the downside. I will have an example for you with Wyndham today, and then to the upside. And then Microsoft's going to be right here on the downside. And what you're basically looking for, and maybe I don't know if I zoom in, I'll just take a little bit of a risk here because we do have that wick. But you could see right now, Microsoft consolidates right off the open. So you take basically in consideration, you knock out the first few candles, and then because, off the open, again, you're going to get consolidation, so that's what we're looking for. So here's the consolidation back and forth with a high of 323 and a bottom here of 321. So it's basically 320.75. Once you get that first break to the downside of one of these levels, that's really what you're looking for. And for me, Microsoft actually happens to break right here at 10:03. It breaks that 320.50 or so, and then it just starts to go to the downside with making some bottoms. And then if you zoom back out, I want to show you this break. When you're taking a morning consolidation break, an open consolidation break, you want to look to the pre-market bottoms here for a possible area to get out of, if not your first part, but maybe extra parts as it goes down, depending on how far it is. But here, Microsoft gives that exact trade. So breaks that pre-market consolidation, the open consolidation. I keep calling it pre-market, open consolidation, then to the downside, stops that pre-market, and then gets that pop right back, that consolidation level again. So I like that initial break, downside, play the momentum to the downside right there. And then I said we go over to Win for one more time. So let's look at Win here. Hopefully the chart will update. Let's just hit that. And here's the same thing to the other side. So here's Win again. Let's draw the lines together. So we leave this out. There's the consolidation high, and there's the bottom. So as you can see, we're consolidating here as we open up, right? Win, bounce, bounce, bounce. Not only that, it's bouncing off of a nice level of $80. So some nice bounces. Then you get the break there at 955. Boom, it breaks it to the open. Your first, so that would be like an 80-50 break or so. That's that high. If you want to take that wick exactly, it's 80-50, right? This wick right there happens at 935. There's the break, and you see the move. It's about $2 to the upside. You may want to, and this is what I mean about Microsoft, you may want to take a little bit out. That's 81, that pre-market high. So I call this a consolidation, early consolidation, then a break one way, right? So there's the break on Win, gets you all the way up to 82.50. That's a nice trade, and your bottom is only 79 and change. So a little bit of a break there, giving you about 50, 60 cents of downside with about $2 of upside. So early consolidation, then the break. You want that initial move, guys. So it's the early consolidation break that I like to look at for charting patterns.
And there you go, a very simplistic and obviously informative look at some charting patterns you can definitely take advantage of. I love the fact that in your example there, Sean, you're talking about an opening range. So everyone can sit back, relax, and watch the price action before putting on that trade, and you understand very clearly where your risk level is going to be. Another informative look there at charting. It's what we all look at in the markets, and it's something that we always have to improve our read on there. So thank you one more time.